Welcome to Markets Now. I'm Michelle Rook with Rich Nelson of Allendale, and seeing a little pressure in the grains early this morning with the livestock futures mixed. Hogs trying to rebound. Cattle futures starting off just a little bit weaker. All right, Rich, let's start off talking about the grain trade. Obviously, a couple of things that we're watching right now. South American weather. Talk about, is it a concern right now? Is that why we saw a pop off the lows in both corn and soybeans, or will it become an issue going forward?
Maybe not yet something that the market really needs to try actually pricing in. Keep in mind, we've just started yield determination for Brazil as well as Argentina. We still have 2 months or a full month and a half ahead here of this important issue. As it stands right now, we actually have seen net dryness for both Brazil and Argentina in the month of December. The market certainly focused more on Argentina, especially as they have that high temperature forecast over these next 2 weeks. So as it stands, it's not yet a rally story, but it could be something which gives us an underlying tone of support on any downside attempts.
You bet. And so it is kind of why we are failing to be able to push this market down, why we were so resilient yesterday and popped off the lows. But we're also going into these reports coming up here on Friday, and this is a huge data dump that we're going to get. Let's talk first of all about what you expect in terms of any yield adjustments or production adjustments on corn or beans.
So they're right. Now, as far as this goes, keep in mind, as far as analysts, we don't like these series of reports at all. We don't have high confidence on these numbers. For the most part, the trade does look for a small decline in corn numbers, a drop from 183.1 bushels per acre to 182.7. We agree with that. We're at 182.6. So the starting point for corn is a lightly lower production discussion. For soybeans, the trade feels a minimal decline, maybe 8 million bushels lower for production. I have a very minimal increase in my own numbers. That's really not an issue for us. The main point we're kind of pointing out as far as corn, lower production. On top of that, we have strong demand discussions. For soybeans, we have maybe a mixed discussion on production. And as it stands, maybe better crush, but still a lot of questions about exports up ahead here.
So do you expect we will see a demand adjustment enough to make a movement in the corn market, or is it priced in already here with what we anticipate for ending stocks?
I think it kind of is priced in. Whether you get to lower stocks from lower production or perhaps a light raise for one of the demand categories, I think the trade does feel quite confident. We will see these numbers on the corn side drop below 1.7 billion bushels. Keep in mind, we started the year at 2.1. So we certainly have changed the corn narrative quite a bit here on this discussion. As far as soybeans, the trade feels confident. Maybe we'll have a light increase for domestic crush. But certainly with our questions on exports, though we're ahead of USDA's goal as it stands, the trade still wonders about this question about cancellations in these weeks ahead. So we'll see about that certainly these coming months ahead here.
Yeah, and that's due to trade concerns, and we'll talk about that. That's a whole nother subject to talk about in just a bit. South American numbers, what will USDA do with those? Is it too early to see adjustments, or will we see Brazil raised?
In our opinion, we probably will see this discussion on South America, more or less, maybe minimal changes, maybe 500,000 tons, something like that, as far as any changes which are seen. For the most part, USDA is generally resistant in making production changes right before reproduction really starts. So the whole ball game for yield production or yield discussion really starts right now and continues in these weeks ahead. So USDA may make some minor changes. It probably will not be a market moving issue though here.
Despite that, it's going to be record global stocks for soybeans, right?
That sure is right. No matter how you look at it, record stocks to use, any measurement you're looking at on soybeans certainly tells a different story than corn or wheat on the world side. So it is hard making a lasting bull market discussion for soybeans in the grand scheme of things here.
And what do you expect for wheat in terms of, first of all, seedings? It doesn't look like the adjustments are much different than what we saw last year for acreage. But what are you expecting?
For the most part, our numbers do imply just a minimal decline as far as the discussions on a hard red, maybe a little larger numbers for soft red. So as a net, we're looking for nothing more than a minor decline for all winter wheat of just 24,000 acres. So in our viewpoint, winter wheat's kind of the set story. The big questions in our viewpoint are certainly about the spring crops ahead. So we'll see about USDA's numbers, but as it stands, lightly lower hard red, lightly higher soft red, a minimal decline at best here.
Global numbers will be important. Do we see adjustments, especially with Russia, or not in the wheat?
And as far as that goes, we feel USD has kind of made the message on Russia here for the most part, as well as Ukraine in these past couple months. We think they'll stand more or less pat as it stands right now for any production and export changes. So we are still waiting for that net decline in old crop export competition. That's not here yet, but we do expect that to come in these next few weeks. Certainly for our main question on the wheat side for world. Will USDA change Argentina or Australia, which are wrapping up their harvest? Maybe a little bit mixed numbers for Australia. For Argentina, maybe a light raise, but probably not really so much going to be a market moving issue here.
So, Rich, we're seeing a little pressure in the grains this morning. So, is that coming from a higher dollar or just the fact that we've ran up into resistance in some of these charts and we can't get through those areas or report positioning?
I do think the U.S. dollar for today's discussion, which is a little higher, maybe adding just a light amount of pressure. This is something which has been a factor for wheat since September 29th, or September 27th. Wheat has actually had a very strong, normal negative correlation with the dollar. So this is something which is a light hindrance for us on the wheat side, and certainly for us on corn and soybeans, where we're watching the Brazilian real versus the dollar. That one has stepped back a little bit from highs just a few days ago, but we're still holding a significant amount of depreciation in the real. So that has not changed. And we're not quite expecting a major change there either. So it's definitely a lot of questions beyond just the supply demand numbers for grains here.
Right. So after the reports, obviously we're going to still watch South American weather, but we've got a couple of other things we should talk about. One is we've got a new administration coming in. There's fears about tariffs. Does that become a focal point here shortly after these reports?
It does, and that's probably the dominating factor until we get into the inauguration and until afterwards as well. So there's a lot of questions about this issue. One, I guess I can say a small positive here, in that in our viewpoint, these grain markets are already trading a significant trade risk discount. In our view, corn has about a 70-cent discount, which we do not feel is needed. We do not feel the tariff issue is going to be that dramatic for corn. For soybeans, we feel this market is trading about a 60-cent discount, which we do feel is valid until we actually see the tariff discussion. So, lightly positive, at least these markets already have a lot of this concern dialed in right now.
So, Rich, is that why we have funds so long in the corn market, but yet we haven't seen that big of an appreciation in price?
That sure is right. And a lot of us talk about the fund numbers and get really excited about fund buying or selling, but we often don't talk about the price response. We've had a dramatic change in corn fund positions, massive amount of buying here since July. And in fact, the last time we had the same amount of net long fund position, corn was 682. So here we are trying to struggle with the 560 price. So yes, corn prices have gone up, but compared with the amount of fund buying, it's a relatively sluggish rally here.
Yeah, no doubt. And the funds have been kind of covering some of their shorts in both soybeans and even in the wheat market. Do they keep doing that, or are they going to stay short because they've been rewarded?
I think on the wheat side, that's a very valid discussion. You know, we've got our questions about an improved U.S. crop. We've got our questions about this rising U.S. dollar. Both those are negative issues. Also, on top of that, we still have yet to see any real change for this mixed U.S. export picture. So I think the funds have been successful on the wheat selling side for valid reasons in recent weeks. And I do expect that to change possibly as we get into February, but not yet right now. Discussion about the soybeans is kind of more of a mixed factor. Funds have been more active in buying or selling in recent weeks, and positive, the market has reacted quite well to them. So I think on the discussions for wheat, no, we're probably not going to see the fund position change too much in the short term. For soybeans, keep in mind they have been more active in recent weeks here, though.
Gotcha. What about the cattle market? We're setting back just a little bit this morning, maybe a little consolidation after scoring some new highs yesterday. And we've had this record cash we've been trying to work in. But what's your sense about, will the funds keep buying here, do you think?
I think they will for the near term. The question is how much longer. Keep in mind for cattle, we had this set up for a bull market with the Mexican border closing, and Mexico supplies us with about 4% of the calves and feeders that we use to go into our beef supply. So we have had this rally since that pre-Thanksgiving border closure. On top of that, this week is a cold snap week here in the plains. So I think we've got a bull set up, and now we've got the bullish of the most bullish of the most bullish news flow lined up for this specific week. So I think, yes, bulls have been in control. They've been successful, but I'm not quite sure it's going to last too much longer. One question about this is a story out of Drovers suggesting maybe January 20th for border reopening. And keep in mind, that's not an official statement from USDA. That's simply from sources. If that happens, we can certainly suggest that a good portion of this rebound in recent weeks will be removed.
Yeah. Until then, we may continue to see resiliency as you and I talk. The market's already trying to come back here. But what's your sense of in terms of when that border reopens? Will it be very slow and methodical? So we will have just a grind lower instead of just a huge drop.
That's the big question. In terms of our initial setup, we would more or less expect a light border reopening for week number one, week number two, and then maybe take a 4, 5, or 6 week development process to get back to full speed. Keep in mind they supply us with about 30,000 head each week. The other argument, though, is kind of a valid one, though. Bears could say there's a small backup in numbers waiting to come over. So as soon as that border reopens, we might get a good number pushed through the border. So I have a lot of questions. I'm not quite sure about what that will be or their market's reaction, but we can certainly suggest it could trim a good portion of these recent gains here.
Gotcha. Last question. Hog's trying to recover this morning, but we have actually done some chart damage there. The funds are still really long. Are they going to keep liquidating?
I think they will. And I'm a little concerned here about this in the very short term. We were basically looking for maybe a $3 break to do some longer term buying for spring or summer positions for 2025. But the question for us right now is this near term market. Cash hogs have been dropping for 7 days straight. Wholesale pork has taken about a $9 drop over the past 8 days. So maybe in the near term, this market still has some bearish issues to work through. On top of that, keep in mind here as far as the chart basis, the chart suggests a head and shoulders top, which implies down to just below 76 on the Feb. We're trading 79 right now. So maybe bulls might need to be just a little more patient, let the bears work this pressure out through the system, and then maybe look at something here in a couple weeks here.
Yeah, it's hard when the funds are all heading for the door at the same time, though. All right. Thanks so much, Rich. Rich
Have a
Nelson
go.
with Allendale. That is Markets Now.